All right. Good morning, everybody. Hope you guys are all having an absolutely amazing day. Welcome to our session today on our daily market commentary live session. I'm your host, Chuck Fulkerson. First of all, do me a favor, make sure that everybody can hear me. Type in the chat box. I'm not in my normal area today. We're building out the new Traders Army Command Center in my home, so that's actually forced me out of my normal office, and I'm into my secondary location. So let me know if you can hear my voice. Okay, beautiful. Just making sure. So I may sound a little different. My face may not be quite the same, but hopefully everything's going to work out just fine. We're going to do what we do every day. We're going to look at our futures markets. We're going to go right up until about 7:30 or so. And we are going to take a look at some potential opportunities. Now, you're right. Somebody said, thank goodness Thinkorswim is back. It was back yesterday morning this time of day, too. Hopefully, they've gotten all their issues squared away. It definitely kept me out of a couple of positions yesterday, as there was not a great opportunity for me and everyone. Different shirt. Yeah, you know what? I'm going with a little pink stripe today. You know, I show my pink side today, Andrew. All right, so let's go ahead and get into it. Let me make my face smaller so I can make the charts bigger, because Lord knows you don't want to spend too much time looking at me. I'm married, and my wife doesn't want to spend too much time looking at me. I'm just saying. So, I'm glad yours was fine, Dennis. Yeah, ours we definitely had an issue throughout the day. Mr. John, good to see you, brother. All right, so let's go ahead and get rolling. So on the ES yesterday, we did have this little area of demand, and this little area of demand was a small 15-minute zone. Now, I do recognize that I'm on a darker background on the charts because I'm working off of a different monitor than usual, so just bear with me on some of these levels. But this was a 15-minute level, and in reality, it did actually get about a 2-to-1 reward to risk off of that zone before then just absolutely hammering down. We came hammering down right at the open before, coming right back up near that all-time high. So that puts us right near that all-time high of 33.98, which actually was our target on our breakout a couple of days ago. Did anybody stay in the breakout trade that we had from our Sunday night? Because some of you are probably still in our Sunday night breakout. And if you are, then that definitely came to your profit target at this point. Now, we believe that there's a chance that we'll get a little bit of a drop-off off of this level, because you usually get a little bit of a pullback off the all-time high. Now, the ES has not yet put in the new all-time high. If you look at the actual SPX, the SPX did put in a new all-time high yesterday at 33.95. And so I wouldn't, frankly, be overly surprised to see a bit of a pullback with our slowing of momentum, especially as we've reached this new all-time high point. If you go back and look, for those of you that watch this regularly, you go back and look, we talked a lot about the last time the S&P reached the all-time high, is oftentimes it'll just poke above that all-time high, and then you'll get a short-term pullback. And if we were to get a short-term pullback, on a daily time period, boy, would this area be really clean. This 33.09 by 32.77, kind of this area here, if we were to get a daily pullback, because I think that would be, and really for those of you that are swing traders, I like the moving averages a bit. For those of you that are swing traders, that would put us right back near the 20-day moving average. So we are seeing on a daily chart on the S&P a slowing of momentum. A little bit of a pullback might give you some of an opportunity to enter. For those of you guys that are looking for for those of you that are swing traders, how many of you out there would consider yourself swing traders? You want to be in a trade for 3 to 5 to sometimes 7 to 10 days. If that's you, one of the things that I would say is one really, really good scan. A really good scan is what we call the bull area scan. And this works on daily charts especially. On a daily chart, I have 3 moving averages here on this chart. I've got a 20, a 50, and a 200-day moving average. And my favorite scan is a pullback for when I've got a 200 and a 50 and a 20 all nicely stacked on top of each other like I do here. I love to see it when a stock pulls back below the 20-day moving average to an area of demand, which is still above the 50-day moving average. right? So below the 20 but above the 50. Well, if that were the case on a daily chart of the SPX, that would put us right back in here. That would be right in that what we call the bull area. So I know that's a little bigger picture. We don't always look at that in the mornings, but I thought it would be worth at least identifying for you guys to see a decent kind of strategy that I search for when looking for potential areas and opportunities. So looking back on our ES, so let's go back to our day trading opportunities. So looking back here on the ES, let's move to the 1 hour chart. And on our 1 hour chart, like I said, we did get a bit of a pullback. This long wick right here really eliminates a lot of these good levels. So do I have a potential for a breakout? You kind of technically do have a potential for a breakout above the Globex high. And that Globex high there is 33.93, formed at about 10 p.m. Central. But there's also the potential for a trap to come into that level. Because if I go to a longer term chart and I look left, I've got to zoom in on this pretty well. And as I zoom in, looking left, we've got this little area right here, which we've kind of come over already. So actually, we're sitting right at the very bottom of this candlestick right here. So this one candlestick had a low of 33. This had a low of 33.91 by a high of 33.97. So we're actually in that area of supply. So you're right in between that area of where that supply would be, and we're basing in front of it. So it still may be a pretty good area for a breakout with limited exposure. The downside is your stop has to go below here, right? So if you take that trade, your stop has to go below here at this point. Why is that? Why does the stop have to go below here if you take the breakout trade? What's up, RJ? Good to see you, man. Why does it have to go below this wick if we do it? Why can't I just place my stop below this general basing area, right? So that's kind of the next rule to consider when we're looking at that as an opportunity. Very good. It's my lowest pivot. Stops on breakouts have to go below the last pivot, and that would be my last pivot. All right. So next, moving over from the ES over to the NQ. That's the rule. That's the rule. All right, so now in the NQ, I will say the NQ actually gives me a better breakout candidate because my 4 hour chart looks like a bull flag, right? It looks like a bull flag. And for those of you that took our last breakout trade, you've gotten a pretty nice move out of that level. And remember, we basically have a standing breakout trade above the all-time high. Provided that there's basing, we basically have a standing breakout trade above the all-time high because that's where you're going to get a decent little entry. If we look on a 15-minute chart and we look for a potential area of a pullback in the on the 15, we do have a little area here at the 115 mark yesterday. I actually like this level here a bit lower. Formed right here is this wick over wick on the way up. So that 11.324 by 11.310. And then this would be a 15-minute chart, which that means purple on the white background. So that little wick over wick area there. So you've got 11.310, call it 11.311 by 11.324 quarter. I think that's actually a really nice area for a potential reversal on the NQ for today. So I think you have either the breakout or this move up here. Now, Chuck, what about the play from where we are down to 11.324? I mean, that's like 60 points. Can I take that trade? If you want. If you want to take that trade, going down, you can look to, if you're a little bit more aggressive, this actually may, if this comes down pretty strong, this actually may become a little level of supply where you can see a reversal. You also still have this up here, which can be a decent level. I like the upper one a bit better if you want to try that one. If you're looking for a short, that upper one I think is cleaner. Just because it's a wick over wick near a pivot. So either one of them I think are okay if you want to take a short, if you really are dying to short the market. Just remember that technically that should be a that should be a confirmation entry on that short. Okay, so that's off of a 15-minute chart. All right, next on the Russell. So looking at the Russell. Now the Russell on our 4-hour has essentially been the weakest of our markets. If I look at the Russell, whereas our other markets, the S&P just put in a new all-time high. The NASDAQ put in a new all-time, well, the S&P index put in a new all-time high. The NASDAQ put in a new all-time high. But the Russell's actually trading down a bit. The Russell's trading down just a bit. And we had this little area of demand on the hourly, this confirmation long, but we came and we gave it a touch and go off of here. We came really close to it in the overnight. And so I actually think that this is now going to make for a better breakdown than it is a long trade. I think you've got a better breakdown area in here than you do for a long if we see price get basing close to this level. Now, when I say close to the level, what do I mean? Basing has to occur somewhere in here in order for this breakdown to be prevalent. So if you're looking for a short, I think this is the market that gives you the better opportunity for a short. Shooting star on a weekly, somebody says. Yeah, a little bit of a shooting star on last week's weekly candlestick. Definitely some selling pressure. And technically, if you trade that star, if we get lower than last week's low, that would be your entry. And that would be where our breakout line is. So, excellent observation, Steve. All right. So those are our equity markets. Let me take a look at the Dow Jones real quick. The Dow Jones, that's what the Dow Jones is telling us. It's really just in between our areas of supply and demand. It hasn't really done a whole lot. It was not as strong as the S&P and the NASDAQ. I think yesterday was pulled down a little bit by Boeing and by, Walgreens Boots Alliance. Both of those came down just a little bit. And so we saw a little bit of weakness, but not a whole lot to add there. We do have an hourly area of demand down below us, right in here on the 1-hour chart, that little area right there before this origin of this move up. Not a great time of day, but actually a pretty clean level nonetheless. You also technically have this level right here, although this level we stayed in it much longer, so a little bit less clean. All right, so let me share my grid on this one. So I'm putting a copy of this grid into the chat box, as well as onto our trade feed for Traders Army members. And we will effort today to get more updates into the trade worksheet. Yesterday we didn't get a lot of updates into the trade worksheet throughout the day, primarily due to the fact that Thinkorswim was being a pain in the proverbial tuchus, as they might say. So, yeah, some of the big retailers did post those blowout earnings, Dennis, but it didn't have enough of an impact on the Dow, right? So it didn't have enough of an impact on the Dow to really make it do anything, which I was a little bit surprised with, was that it didn't really do much for the Dow. All right, let's move over to commodities. Oh, John, that's good, man. I'm glad. Well, that's because Corey showed me how to update my font. I didn't know how to update the font, and that helped a ton. All right, so looking at the CL. Now, we had a level yesterday on the 15-minute, which was right in here, this little unbalanced wick over wick, but your stop has to go below the pivot. So actually, let me go back in and readjust this because my level was actually here. It was this wick over wick on yesterday's charts. But our stop has to go below the pivot, which is here. So you may or may not have gotten stopped out on this position. This one came right down to the level and then popped up. And then, so our advice was, moving a stop to break even, and then it moved to break even, and we got another nice move away. And so whether or not you got in on that one, I'm not sure. A lot of people did. A lot of people got stopped out because it moved. We moved that stop to break even. But either way, we've got a 4-hour that is still trending to the upside, although fairly weakly. We've got to get through these upper wicks in order for price to continue to move. We're going to have to get through those upper wicks. Now, my longer term vision of oil was definitely a more bullish sentiment, in that I was a believer that we would make it to 45 by the end of summer. I'm running out of time on that. if you count the end of summer as the end of August. So my longer term bullish sentiment, still alive, but definitely showing a bit of weakness in there. Oh, good, Ingrid. I'm glad you like the back. So maybe I will go. If you guys like the black background better, I can do it a little bit better. So, Kevin, thanks, bud. Thanks for joining. Liz, did I specialize which summer? No, I didn't. That's a great way to kind of hedge my bets, I guess, right? So if we get a pullback in crude oil, let's move to a 15-minute and go to a little bit smaller time period. If I go to that little bit smaller time period, I can move to this area right here. Yeah, if you guys prefer the black background overall, I can go to a black background. Frankly, the reason I went to a white background is because when I present in front of a class, it just shows up better on a projector. But I'm not presenting in front of a class anytime soon. Actually, I think our next live class isn't until November with our active trading intensive. Hopefully, we'll be able to have it live. But I can do this. Oh, NQ crashing fast. Let's go take a look at it real quick. Yeah, it's dropping a little bit. I don't know that I would use the word crashing, Ingrid, but we're definitely falling a bit. I would like to see a bit of a retracement back up before this thing keeps falling. And so now that we did get a little bit of a better move away, you could utilize this zone right here if price comes back. If you wanted to give that 11.4. So, all right. That's actually a much better level now than it was just a few minutes ago, because just a few minutes ago, the market was down to about here. So now we've gotten a nice strong move away from that little level. And so that would put this, let's make it more precise. To be more precise, it's 11.398 by 11.406. Stephen, I like white background for printing. Yeah. Oh, we pulled out of the China trade deal. Yeah, that'll give us news for like 15 minutes. That'll give us 15 minutes of quality volatility. I'm sorry, that was me being a smart aleck. In crude oil. So anyway, back to crude. We've got that little level down here, small time frame. Breakout is still existing. On the 4 hour, we talked about it a while ago, but until I get above here, I've got a really hard time on much of a breakout. So, all right, gold. So in gold, this frustrates the crud out of you, huh? So we had a really nice demand area here in gold that the market came to and said, hey, by the way, I don't care that it's a nice demand area. I'm going to blow right through it. And it just cut right through the zone. Now, I will tell you, when I get stopped out, that's the way I prefer to get stopped out. I want to get stopped out very quickly. Look at this. Listen, you guys, I love you guys all dearly. You can argue black and white all you want. I'm going to pick the one that makes the most sense for my monitor. So right now, the monitor I'm on, black is better. So now, because ultimately I'm still trading my account. My supply zone still may work. I'm going to put a little line here that we don't technically have a third touch as of yet. But if we break down below here, we could see a little bit more of a movement. The supply zone still may work, but it's definitely a confirmation entry. It's definitely a bit of a confirmation entry if you take that. So I think you actually may get a little breakdown off this 1986. Somewhere down into one of these regions in here. And if you get a breakdown off this 1986, look to this 1966, 1965 area as a potential target for an intraday trade. Natural gas. So our natural gas, we had a kind of a gap and go setup from Sunday night. So John, I'm not John, and Liz, I'm not sure if anybody got into the gap and go from Sunday night. It actually gave us an entry right here. Remember that. Yeah, Pia, it's like a black and white cookie, right? Like those black and white cookies you get. So we had a on the nat gas, we had a gap and go situation. Sometimes those gap and goes, frankly, don't even give me an entry for 5 or 6 days, or for 2 or 3 days. And then we did get the entry, but then 1, 2, 3, 4, 5, 6 candles later, we were basically back at break even. John says I passed on it, which is fine, John, because it's, it went nowhere, right? So even if you took it, it went nowhere, but it gave you an opportunity to get in, even though it went absolutely nowhere. So now, what am I looking at? Well, let's look at the origin of some of these moves up as potential reversals. On my 4-hour, while we're still rising, I've not seen, let me throw my momentum indicator on here. So when I look at my momentum indicator, here's how we gauge the best way to gauge your momentum indicator is like this. Take a look at a swing high in price and correlate that to a swing high in your momentum indicator. Take a look at another swing high in price and correlate that to another swing high in your momentum indicator. And then connect those two swing highs. So in price, I clearly have higher swing highs. In momentum, I clearly have lower swing highs. Now, by the way, that doesn't mean that the upward trend is over. Look at this one. Here I had clearly lower swing highs in momentum and slightly higher swing highs in price. What that did was it caused a stall, and then we wound up getting a pop. So I'm not saying that the upward move in natural gas is over, but I am saying that we have clear divergence and a stall in this price movement, right? So that would tell me that we may get a decent pullback. And if we get a decent pullback, where's a good area where we could see a potential long? Well, in my mind, the best one is the one that we already have marked, this wick over wick down here right near the pivot. I think that's our best entry. You do have a decent little level that we're actually coming to right now if you want to give this a go. If you give this one a run, let's see if I can trim that on the 15. You could theoretically trim this down on the 15 to about here. If you want to give that one a run, 2.362 by 2.35. I prefer the lower level. I think that the lower level is cleaner. I think that the lower level is going to give you a slightly better entry than the 15-minute level. The lower level is also on an hourly chart. And on an hourly chart, you're going to have better, higher probabilities. Now, the downside is we may not get to that level, or if we do, we may have so much momentum that we will have cut through some of these other pivots and we could have blown through. So just be aware that I can't have any basing coming into that level as we would come back down into that zone. Okay? Copper. So in our copper position, we had a very good example of price came super close to our 15-minute supply and then pulled away. And since we came super close to our 15-minute supply and pulled away, that converts this to a confirmation entry. Well, then we started basing before the level, which then cancels the trade altogether. And then we got a strong pop-up and away from there. So now we go to the 4-hour. Yeah, John, I agree with you. I think the lower one is the way to go. So now when I move to the 4-hour in here, which is where we've popped above this level in this area, clearly our 4-hour move is to the upside. And so a pullback that makes a lot of sense would be to come back into this area here, 2.9234 by 2.9089. All right. I'm going to forego some of my commodities markets today, or I'm going to forego some of the grains and corns and such because I want to get to bonds and currencies before I run out of my half hour. I really try to keep these to 30 minutes. In the ZN, which is our 10-year note, we looked yesterday at a potential breakdown from here. We can see that this 139.75 was a strong price rejection point. Price has rejected that area twice. And so since rejecting that area twice, that tells me that if we come back in here and base, it's actually a really good breakdown. That being said, I'm coming up into a potential area of supply right in here. Now this potential area of supply formed at 7 a.m. Central Time, 8 a.m. Eastern, actually a pretty good time of the day. My bigger problem is the basing we're getting in front of it. So what I'm going to do is remove it in favor of this level up in here. I like this one a bit better. On my 4-hour, our 4-hour trend, technically I've not put in a new swing, although we're seeing definitely price rallying back up. So I would say your supply is best up here, and your breakdown is right there. And as far as quality demand, if you want to get long on a pullback, to me, none of these levels are very clean, even when I go to the 15-minute chart. In our Aussie position, so yesterday our Aussie trade, we actually did get a nice little 2-to-1 move out of this level. It came past the entry, or past the opposing zone. So hopefully you're able to pull a little bit of money off the table on that one. If you were trading that one yesterday, we actually got a really nice move away from it. Now our 4-hour continues to go higher. So if you want to take any of these, they have to be confirmation entries. No way we can get in with anything but a confirmation entry. Even if I move to the daily, right? I go to the weekly. When I zoom out here to the weekly chart, we got a couple of lines up here that we're coming close to. I'm actually going to remove the closest one because on a weekly area, we're coming to a little bit of what I think could be some resistance over there at 0.7333. But on a pullback, where's a chance to get back in? So on a 15-minute chart, we've got a little wick over wick area right in here, but it's not as clean as the opening market zone right in here. So keep an eye on this one for an opening zone, opening time of the day entry. That was the right there at the London Open for a potential reversal. Next, the euro. So in our euro level, we have another picture of a strong bullish move. We broke above those two highs, and now we're kind of consolidating and basing right in here. Now we're basing below this hourly level. Let's go to the longer term chart and go all the way back. It's more than a year back, so I can't even go pull that up as to where that level came from. I can't go back and pull where that level came from because I can't get more than a year's worth of intraday charts. And so what I'm going to do, because we're basing in front of the level, I'm going to remove the level completely. Since I can't go back and find out where that level was formed, I'm going to go back and remove it, and then and we're basing in front of it. So basing in front of the level would tell me that if we get some more basing, you may have an opportunity for a breakout above this region. On a pullback notion, looking at price coming back down, if I go to a 15-minute chart, we do have this little area here before this speed candle, and we anticipate speed candles will tend to get retraced. So our anticipation is the speed candle will get retraced, and then price will trade in the direction of that original speed candle. But it's a 15-minute chart. Okay? Great British Pound, Canadian dollar. So in our Canadian dollar, we had an area of demand very similarly to our level that was in gold. It just wicked right through it yesterday. Even on a smaller time period, you can see. I mean, it was just, I say it wicked right through it. It blew right through it on a 15-minute. But on a 1-hour chart, wicked right through the entry. Gave us a little bit of basing if you wanted to take a bit of a breakout, but then it kind of went nowhere. So when I look at the 4-hour, the 4 hours definitely still continuing its upward trajectory. And all of these, by the way, all these currencies are buoyed by the fact that the dollar it had hit this daily area of demand and is unable to hold that daily area of demand. So when I look at this, let me throw this on here real quick. All right, so when I look at this daily area of demand, get to it now, 10-year daily. From way back here, we hit it once and got a little move away, hit it again, got a little bit move away. We're now breaking through to the next daily area of demand. Well, where's my next daily area of demand? Well, it doesn't come into play until somewhere down in this region here. Matter of fact, I got to go out to a weekly chart. And when I go out to a weekly chart, you've got moves somewhere down in this region. And that's about as low as we've gotten in a while. Okay? So that's about as low as we've gotten in a while since 2017. Now, you've got to go back. The dollar definitely had some weakness. Like 2013, 2014, it was much weaker back in here. So there's precedence for the dollar to get all the way down here to around 80. Now, if you think about it, what caused us to get our dollar down this low? What was it that caused us to get our dollar down this low? Does anybody remember? I mean, we're digging back here into the archives as to why did our dollar get this low. Now remember, this is the dollar index as compared to other currencies around the world. But we had a specific reason as to why our dollar dipped to, on its low point, 70 cents. Right? Now, the way to think about this is global purchasing power parity. So here's the way to think about it. This meant that its low point, the dollar globally bought you 70 cents worth of goods and services all over the world. Okay? The dollar would buy you 70 cents worth of goods and services all over the world, and that was due to the fact that it would be the quantitative easing and just completely printing money. Well, relative to the amount of money that we print back here, what's happened to the amount of money we've printed recently, right? Relative to back here. Right? If we think about it, we've actually printed more money than we did back here. Now, here's the rub, though, is that so have other countries, right? When we were doing it back here, we were kind of the only ones doing it. And then other countries started doing it after we stopped, which is why we saw our dollar rise in value. Well, now, pretty much the whole world is printing money. So it's almost like an equilibrium basis in there. Because I've heard that from a lot of people. They're saying, well, we're going to have hyperinflation if we keep printing money. We're going to have hyperinflation if we keep printing money. Let's use what the charts tell us, right? Yes, we're printing more money, but so is everybody else. And so if everybody has inflation, right? We think about it. We think of all the fiat currencies have inflation at the same time. Then everybody's going to have more money to pay for those goods and services, right, Liz? And it winds up balancing out. So I'm not having the same gigantic fears that a lot of people are having about the dollar, cleanest football jersey in the wash. That's good, Dennis. I'm not having the same fears that a lot of people are having about the dollar absolutely falling apart and losing all of its value because we keep printing money. That's exactly right, Rich. This is why gold is up as far as it is, because people are going to that for true, they think it's true currency. My point is that we can fall further in the dollar. The dollar can fall significantly further, which means that when I'm looking at my currency trades, remember, currencies are a much better position trading tool and swing trading tool than they are a day trading tool, right? For those of you that trade currencies are a much better swing and position trading tool than they are a day trading tool. And you're better off trading the long running trends. And just keep that in mind. That's why, as much as we talk about currency futures, I think there's a lot to be said to just trading the actual currency pair, because you can stay in the actual currency pair much, much longer and ride the bigger picture trend. So I just want everybody to be aware of that. I mean, I'm not totally so tied to only using currency futures. All right. Anyway, back to the Canadian dollar. As I digress. I know it's hard to believe that I digress and went off topic. I know I'm running a few minutes late. I'm almost done. All right. Yes, Richard, Bitcoin as well. I actually found a Bitcoin trade yesterday. I'll pull up a chart on it if you guys want to see it. So, that's a good point, Richard. So on the Canadian dollar, the breakout above this level, if you don't love that breakout or you've not taken it and you're looking for a better opportunity to get in, you can look here on the 15-minute as a potential entry zone. Great British Pound. We talked about a breakout above this line here yesterday. You may or may not have gotten in depending on this basing in here. This basing was not the greatest of basing, and we didn't really get 3 touches. So, I mean, technically you've got 1, 2, and then on your third touch was the breakout. The basing was somewhat suspect. So if you didn't get in, please don't kick yourself. That was not the cleanest of entries to get in on a breakout. If you did get in, and hopefully you took some money off the table before the markets have started to reverse a little bit. Now, as we've reversed a little bit, coming back down on the hourly chart, we have, this area here, which is a little wick over wick that we're kind of bouncing off of now. If you want to look at taking this one, I wouldn't take it now unless you take it as a candle-to-candle style. I love this lower buying pressure on this wick here. That tells me that there's buying pressure. So I would say that it makes sense to go long only if I get a candle with a higher high and then move your stop up as a technical stop. Other than that, I like this area down here for the long going forward. And then the Japanese yen. So in our Japanese yen yesterday, we talked about this potential reversal area. 1, 2, 3, 4, 5, 6 candles later, it gave us an opportunity for a breakout. So we left this area in here. We just changed its color because it now acts as an area of demand if price comes back into that range. So that range that we would anticipate seeing price come back into will be coming back. It may not happen in the next day or two, but we could get an opportunity for price to come back into that range later this week, especially with the fact that this last swing low was unable to put in a new swing high. And the inability to put in a new swing high, I think, is clutch. All right, so those are all of our levels for today. Let's take a look real quick at the NQ before we leave. We had talked about, so we don't have a retest yet back in any of these levels. So just keep an eye on this one as we continue to look at some of these different areas. Real quick, one thing I want to highlight. I showed this to you guys. For those of you that are Traders Army members, real quick, we have coming up this week. Tomorrow's our live trading room. And then starting next month, I want to make sure everybody's aware of it. Starting next month, we've just added it to the calendar. We are going to start doing, we already do an open forum every other Wednesday, so you guys can come and ask any questions that you want. But starting next month, we're going to start doing a Wealth Essentials class every other Wednesday night for those of you that are looking for big bucket thoughts and ideas. So our Wealth Essentials session. So we've got, you've essentially got 5 trading rooms a week now where you can come in and join us inside the Traders Army membership. So if you're not a member and you want to join one, we'd love to have you. I appreciate you guys joining us on these Wednesday sessions, irregardless, because I think it's a fun and a good opportunity to get to see some more people. So I'm going to head out of here for the day. I hope you guys all have an amazing trading day, and I will talk to you soon. See ya.